straight to Wall Street. We are waiting on the closing bell. It marks another ugly day for stocks. The Dow, S&P 500, and NASDAQ all in the red today. The S&P and the NASDAQ on track to have their worst days since April. The Dow looking to end its worst week in months. Two big reasons for the drops, the data and the deals. First, the breaking news on that data. A senior White House official telling CNN within the past few minutes that a top official at the Labor Department has been fired at the president's direction. And there you hear it, the closing bell there on the Dow. After numbers out today showed a big slowdown in the job market, one of the biggest since the pandemic. The July jobs report says the economy added just 73,000 jobs last month, and that is way off of what had been predicted. But perhaps more important is the revision of reports from the two previous months, June and May, saying the government overestimated growth by some 258,000 jobs. And now, about 8 hours after all that not so great economic news, the commissioner of the Bureau of Labor Statistics is abruptly out of a job, accused by the president without evidence of fudging the numbers for what he says is, quote, political purposes. Where might that idea have come from, you ask?
What in the hell's going on there? And have we put in our own person into BLS? Is a MAGA Republican that President Trump knows and trusts? Are they running the Bureau of Labor Statistics yet, sir?
No, unfortunately, Steve, we still haven't gotten there.
That, of course, Steve Bannon from earlier today with the chief economist for the conservative Heritage Foundation. And of course, we haven't even gotten yet to the tariffs. The rollout of a new trade policy impacting virtually every country is also factoring into the economic chaos, with Republicans pleading for patience from voters.
Everybody in Washington now seems to be an economist, and some of them just don't know what they're talking about. Taking their advice is like, it's like taking the advice of a nun about sex.
Okay, well, that's an evocative analogy from Senator John Kennedy. Our panel is going to be here, but we're going to get started with CNN Chief Domestic Correspondent Phil Mattingly. Phil, wonderful to have you with us today, and you are definitely earning your paycheck because we've got the closing bell, stocks taking a tumbling, the president fires a top Labor Department official, the newest round of tariffs, and just before we came on the air, we're learning that a member of the Federal Reserve Board is resigning. How does this all interact? And especially, what do you make of this breaking news?
Yeah, what's the Always Sunny in Philadelphia with the string chart where he's like trying to connect all the different things? Do you feel a little bit like that? Not quite the slow summer Friday that I think we all were hoping for on some level. All right, let's start with the firing of the labor official and tariffs and the jobs report, because those three things actually do connect. Jobs report, as you noted, Casey, was disappointing on the top line for the numbers that came out representing July, but obviously it was those downward revisions you were talking about. That even White House officials, which very rarely acknowledge kind of any potential downside of anything, were saying, look, this isn't ideal. $258,000 or 258,000 jobs makes the last couple of months look very weak on net and presents a very different picture of where of the U.S. employment situation than I think anybody assumed going into the day. The U.S. economy's resiliency, I think, is still pretty set and has been very clear over the course of the last several months, despite the president's expansive tariff regime, which has now gone into place. And the jobs market was a really critical element of that, just month after month after month, churning out kind of estimate-beating numbers. Those estimate-beating numbers now look like they were pretty far off base. So that's problematic. It's particularly problematic because the president's tariff regime, those April 2nd Liberation Day tariffs, 120 days later, turns out he wasn't actually tacoing about anything. They pretty much went into place with a couple points down here and there, depending on the country. That's by design. The president and his team have been very clear. They thought their policy was the right policy. They thought their policy was working. They thought they had leverage as they implemented that policy. That's now in place. Now let's get to the Labor Department official. Look, the Bureau of Labor Statistics is not something that most Americans are paying super close attention to. The BLS commissioner is certainly not a household name, probably not even here in Washington. And yet it is an appointed position that serves for a 4-year term. The official has been fired. It is almost certainly within the president's authority to do so. There may be some battles on that front, but I don't think there's any question about that, especially given how he's operated over the course of the last couple of months. The reality is this: there's just, as you noted, there's no evidence of politics here. The president, over the course of the preceding 3 or 4 months, without fail, was touting these great jobs numbers under the same BLS commissioner. The Biden administration spent the first 2+ years in office with a Trump-appointed commissioner. And so the concern here is, and I think, Casey, you know well, I'm not super reactive to these types of things. You and I both have too many kids to have the time to do that. I think the concern here is U.S. economic data is considered the gold standard worldwide, and calling that into question right now, there's just no net benefit for it over time. And obviously the president's done it in the past, but this is the first tangible action he's taken related to it, and just doesn't seem very smart.
Well, and Phil, just to underscore your point here, Donald Trump just posted on his Truth Social platform this, quote, "In my opinion, today's jobs numbers were rigged in order to make the Republicans and capital me look bad, just like when they had 3 great days around the 2024 presidential election. Then now we're into, him talking about votes." So he's continuing down this path, and I think you did a really nice job of explaining why that could matter to all of us. Phil, let's also touch on what's going on at the Federal Reserve, because this resignation, it sounds like, bring us up to speed on what happened and what that means for the president.
Honestly, what I've been thinking about is maybe if Adriana Kugler had put this out a couple of hours earlier, the BLS commissioner may still be in place, because this is something that the president would likely be very happy to see, and I'm almost certain he is. Her term was slated to end in January, so she's long been kind of factored in as one of the officials that the president would have an opportunity to replace with one of his own appointees. She's a Biden appointee from 2023. She took over an existing term, which is why it's ending in January. According to the statement, she's going back to Georgetown to teach in the fall. That was her decision. She's a labor economist by trade. She has been somebody who has been on the record that she does not see the necessity of cuts in the near term, which means obviously she's in the group of Fed officials, Fed governors, that is on the opposite side of where the president very hyperbolically is on this situation. I think what's interesting here is not only the president knew he was going to get a couple of Fed picks and obviously a Fed chair pick next year, which he's been talking about. His team's already started the process. They're pretty far down the process. We'll see how that actually ends up. But now he can move immediately and add that we saw two dissents from 2 Trump appointees in the last meeting. This is a legitimate economic debate. I don't want to dismiss this as some kind of Trump thing just based on his Truth Social. This is a very legitimate economic debate, which I think was underscored on some level by the jobs report today. The jobs report is actually good if you want a rate cut like the president does, but now he's going to get a pick and a confirmation process, and soon somebody on the board to join his other 2 appointees that have already dissented, likely, we assume, will share his views on this matter.
All right, Phil Mattingly, thanks very much. Again, earning your paycheck. Really appreciate it. Have a great weekend.
You too.
All right, our panel is here in the arena. CNN legal analyst Elliot Williams and CNN political commentator Jonah Goldberg. We're also joined by CNN political commentator, former Biden White House Communications Director Kate Bedingfield, and CNN political commentator, Republican strategist Michael Singleton is here. And we are also joined again by Shark Tank host, chairman of O'Leary Ventures, Kevin O'Leary. Some of you may know him as Mr. Wonderful. And so, Kevin, you are back today. Yesterday, you were here arguing that this mattered to you as an investor and that the policy had been good for you as an investor. We started the show showing that, you know what, if you're an investor, the policy actually today did not seem to serve you very well. And there are some questions here about these jobs report and the policy that the president is undertaking here. What say you today?
I don't look at one day's trading and decide I'm going to change my strategy. I mean, I want markets to correct. I want them to go up and down. We're used to volatility. We had a bad print on jobs. I did not agree on whacking the commissioner. I don't like that. Whacking statisticians makes no sense whatsoever. You don't shoot the messenger. They used to do that in ancient Rome. Bad news, they kill the guy off the horse. You don't need to do that now. It doesn't matter. This is a job where you just print data. So I didn't like that story. I think the market is a little concerned about major trading partners not getting deals yet that make sense. It's not a good idea to have 35% tariffs on Canada. We know that that's coming into place at midnight right now, unless something magic happens. So there's a lot of vol around what's going to happen on trade. because you heard Ford, automotive company, whining about $2 billion worth of profits evaporating because of tariffs. You heard that from GM last week. We talked about that yesterday. So with this volatility, it's more about future earnings. But a lot of this stuff, including the trade print or the job print, noise, just noise. You don't make decisions based on one print.